Hello and good morning everyone. I'm Abhijit and welcome to a new episode of Investing Fool where we discuss about DIY momentum investing. In today's video we will have a cursory look at the portfolio. एक दो मिनट के लिए देखेंगे portfolio, not too much discussion around it, but we will discuss more about the mindset that you should have as a momentum investor to stay long in this kind of a choppy market. We saw some red sessions last week, and the market seemed to have made a very small recovery in yesterday's session. But we'll talk all about that. I tried to shoot this video yesterday actually, but due to some reason there was an issue with the video and it got stuck after a couple of minutes. So when one user pointed it out, I took down that video and I'm reshooting it today. Hence, I'm shooting it before the market opening hours today. So hope the budget doesn't throw up too many surprises. Anyway, let's before beginning, the familiar disclaimer that none of this is financial advice. I'm not a financial advisor. I'm investing my money in the stocks that I'm showing, but I'm not telling you to go and invest your hard-earned money there. So consult your financial advisor before making any investments, and all this is just for education and illustration purposes only. Okay, let's take a look at the portfolio first, क्योंकि we haven't taken a look for quite some time since we added those two large cap stocks, right? So if we take a look at yesterday's session, and before yesterday's session I would actually comment a little about Friday's session. On Friday's session everything was red, like top to bottom everything was red. The portfolio was like -3% down or something, and the index, our benchmark index Nifty 500 was down 1.5% or something. And it was like bleeding red throughout, right? The only stock that remained in green was Kalyan Jewelers, which was the last man standing. But those kind of swift falls can come in momentum anytime. If you see in terms of the all-time returns, we were like a couple of weeks ago, I think we were at 41 or close to 42%, and we slid down very quickly, right? 10% we lost just like that. And we have come very close to the market. In fact, on Friday, the alpha, the returns of the portfolio and that within the market was less than 1%. So I was sure, I am still sure that if we continue on this minor correction, if yesterday's movement or yesterday's market action was an aberration, in the sense that the bears may get heavy again either today or tomorrow. I'm not saying it will. I'm saying if that happens, then the portfolio can very well go down the index returns as well. And nothing to be worried about it. That keeps happening. We will look at all of this, and we have experienced worse corrections in the previous also. So in the previous months, like in March, I think we corrected quite a bit. At that time also the portfolio had reached like 27% and all, and we crashed down straight to like 15-16%. We again recovered it, but we'll see how this thing pans out, how the budget pans out, everything. So let's start the discussion. Okay. So in terms of the portfolio, as you see, like all existing outperformance, the existing alpha that we had, right, of around 10% vis-a-vis the index has been wiped away. And this is one of the cons of being with a high beta strategy. So when you are, so first of all, like, why am I doing this video, right? It is because there are many, this channel has grown a little bit compared to previous months, and there are many new members also who have joined in very recently, right? So they may not have seen the March small corrections. They may not be even around during the June election verdict, right? They may have just seen it very recently, right? And after the June election verdict, the market has like grown like really amazingly, right? And people might form the perception that, oh, so stocks are going so great, I can just make money in a few days and get away with it. It doesn't happen that way. So we have to temper our expectations a little bit, and we have to understand what momentum investing is, right? I mean, sure, it works, but in very short terms it doesn't work. So let's go through point by point. So first is why, like, what things are the market factoring in because of which there was this small correction. Maybe they were just jittery, right? We will know if the market starts going up from today. No one will even remember this correction, but still I'm making this video because panic does set in, right? When your portfolio is like 3 weeks old and all your gains for the last 3 weeks are wiped away, you are completely in red, then panic sets in. You start doubting your strategy, you start doubting your own outlook towards how you want to invest your money, right? So all those things happen. So first of all, there could be many concerns because of which the markets were jittery. It could be regarding the capital gains taxation कि कुछ changes आ जाएंगे, capital gains बढ़ा देंगे for securities, for equity and all. That can still come today. We'll have to see. Sector allocation budget में, right? So all those sectors that have run up, be it railway, be it defense, be it infra, be it something else, housing, affordable housing, whatever, how much funds are allocated sector wise in the budget for those sectors, whether there could be any major changes, and if there are major changes, then how would it impact the stock market, right? There could be geopolitical headwinds because of something like Trump's election and how his attitude is towards the European crisis, the Middle Eastern crisis, the China-Taiwan issue, how it would impact other emerging markets, like bunch of issues related to that. The fourth one could be like, could there be a halt in liquidity because some action that RBI or SEBI or the Ministry of Finance takes, because there have been concerns voiced out कि savings का पैसा जो कि बैंक में रहना चाहिए, that is going into equity markets, लोग जाके FNO कर रहे हैं, like this is speculation, this is not like investing, it is not helping anyone basically, right? So there could be some breaks on FNO, there could be some impact on liquidity in the stock market. Maybe the market is factoring all that in, right? Be whatever that may be, right? We are not here to say कि ये चीज शायद हो सकता है या ये चीज शायद होगा. We are not in the game of prediction. What we are in the game of is taking cues from the market when it gives us and tailoring our investments accordingly, right? Our strategy should remain same. If it is back tested, if it is right, then we should just stick with the strategy in all times, right? We should try to stick with that. Corrections will come frequently, and in a long bull run, small corrections actually help extend the bull run, right? अगर मार्केट सीधा 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 तो ऊपर जाता रहेगा, तो जब गिरावट आएगी तो भी बहुत ज़्यादा गिरावट आएगी. The fall will be extreme, right? So you do not want that. You want minor corrections on the way so that the long-term health of the bull run stays okay, and you are able to sustain it. Okay, and your portfolio, what is the job of your portfolio? The job of your portfolio is to be able to respond to the market changes, whatever cues the market is giving, whatever direction, whatever guidance the market is giving. The market may be saying that okay, this sector has stopped performing, go to this sector, or the market may be factoring something else in, like, so you have to stay attentive to that. Your portfolio should be agile enough, should be dynamic enough to accommodate those changes. ऐसा नहीं कि बस पोर्टफोलियो बना के रख दिया और फिर 6 महीने तक सोए हुए और मार्केट का पूरा नेचर, मार्केट का पूरा फ्लेवर ही बदल गया है, एंड यू आर नॉट एबल टू रेस्पॉन्ड इन टाइम टू द चेंजेस, राइट? सो दैट शुड नॉट बी हैपन. द one more thing that you should keep in mind, and this I've said multiple times on this channel, that any CAGR which is more than 15 to 20% is a bonus. And when you are thinking this, think of yourself as a long-term investor. When we are not in this market to make money for 3 months, 6 months, 1 year. Like, if your time horizon is that short, we will look at some risks, and in the end, actually, so watch the video till the end. I will give you sort of a quote, not a quote actually, sort of a way to look towards the towards factor investing in general. Anyway, so if the CAGR, anything that is more than 15 to 20%, you should take it as a bonus. When we reached 24%, when we had reached 24% on this portfolio, I was saying on this channel only that from here on till the end of the year, if I get 0% also, that is fine, because you have to contextualize 24%. What does 24% mean? 24% return means that you are basically doubling your money every 3 years. As a long-term investor, that is way more than you normal investors would ever make, right? So, and I'm not saying that would that would be the case in every year, right? Some years it would be negative also, some years it would be very less compared to the index also, some years it may be much higher than 24% also, right? So you have to put it in the right context, and you cannot expect that आधे साल में तुम्हारा 40% हो गया तो in the next 5 months it will become like 70% and you would go home with 70% returns. That is not the case. That will never happen. These kind of returns in a very small time frames are abnormal. They should not be treated as normal. Okay, and we should not generalize कि ऐसा ही चलता रहेगा. The good times do not last. Okay. Final point, in terms of what causes the most pain to momentum investors, swift corrections which recover quickly, जैसे जून के बाद आया, जैसे मार्च में आया था, जैसे होपफुली इस बार है, can be still okay for momentum investors. What is not okay is long drawn out markets where the markets are just trending sideways, not going anywhere, and this can continue for months, for years, right? That can happen. Those are much more dangerous than like the whole market falling very quickly and then recovering in a few weeks, right? I'm not saying it will, but we'll have to see about that. On the right side, we have this chart of the stock portfolio stock, Power India, Hitachi Energy India. So look at the massive fall that it has had. So if you look at these kind of candles, red candles one after another coming, and you sell in panic, that would be an error. We would look at all these things, but you never know when these stocks can, because momentum is a high beta strategy, right? When we say high beta, it falls more than the market when the market starts falling, and it rises more than the market when the market starts rising. It doesn't happen in all the cases, but that's the general trend. And individual stocks within the portfolio can fall much farther and much and grow much higher also, right? So you have to take care of it in how you're position sizing, how you are doing your asset allocation. So all those things become important. And if you see corrections like this, it is important to to stick to your strategy, right? Sometimes doing nothing is sort of the best course of action. If you see here, the two charts of so the right hand side is Nifty 500, which is our benchmark index, and the left one is this ETF by Motilal Oswal called Mo Momentum, which tracks the Nifty 200 Momentum 30 index. So this is a collection of 30 stocks out of the top 200 stocks. So these stocks are much more liquid. They're expected to be less volatile, and this is the top 500 stocks. But if you still see the falls in this versus this, the falls are kind of major here compared to this. So look at the March fall here versus the March fall here. Here also, on Friday's close, the index had given a minor like correction here. Here the correction is much more, right? So these things will keep happening, and we have sort of a recency bias in the sense that we remember last 2 weeks, last 3 months, or in the longer context, even last few years data more vividly, or maybe correctly, or with some bias compared to past data. So if we go look at past, we have had multiple corrections like this. Like this correction, like look at this March one, right? It is even bigger. You go back in time, you feel even like there will be other things also. Like you can see in November also this has fallen too much. This again has fallen by quite a margin, right? So when these things happen, it's also like you have to think that if the long term bull trend is intact, we will get over this, right? We do not have to panic every time. So we should understand the risks of momentum. So what are the different we won't like talk about all like different risks of momentum, just the general mindset that for once you should understand that momentum is one of the most persistent factors in investing. Okay, so there are other factors like value, there is quality, there is volatility, like whatever other factors are there, momentum is one of the most persistent factors. It has been observed to work across geographies, across like time periods, and across asset classes also. Okay, but it is not a holy grail. It is not a solution, one solution for every problem that is there in your investing journey, right? This is a high beta strategy. As I already said, it can have swift corrections, and it can have huge drawdowns, like 50%, 60% drawdowns it can have. It can stay at the same level for 5 years. It may not work for 5 years, right? Factors also ebb and flow, right? All these factors, they work sometime, they do not work for some years also. So do you have that investment strategy which lets you stay invested and follow it while momentum is not working for, let's say, 4 years at a stretch, right? Can you do that? It's not very easy, and most people would not be able to do that, right? So you have to like think of your investment journey in entirety, with everything. So another thing is that the probability of a momentum portfolio underperforming the broader index is very significant in the first year. So whenever you start your portfolio, let's say T1, right? So T1 plus 12 months, within that period, the probability of your portfolio underperforming the broader index is significant, right? That probability decreases as the time horizon increases. So if you extend that to 3 years, to 5 years, to 10 years, the probability becomes almost nil that you would underperform the index. And underperformance, I'm not saying here negative returns. You may be underperforming the index. So let's say the index is giving 20% in 1 year, you are getting 16%, right? 16% is not bad also, right? Or the index is giving like minus 3% and you are down like minus 7%, right? Whatever it can be. One thing that frequently comes up is that why don't we keep a tight stop loss? So if you are new to momentum, having a very tight stop loss might feel very good in the bad times. So when the stocks fall a lot, right? If some stocks falls like 40% in your portfolio and you had a 5% stop loss, so when the stock like started, let's say it was at 100, it fell to 95, and then you sold off your positions, right? And then the stock went to like 40 or something. So then you would feel very happy that okay, it was great. But what if the stock fell to 92, so 8% loss, you sold at 95, the stock then went to 120 and up and up and up, right? So you do not get the luxury of getting back in time. Having very tight stop losses exposes you to whipsaws, which means the stock will keep going up and down in kind of a band, triggering stop losses continuously and not leading you anywhere, right? So beware of the churn. You have to maintain the right amount of churn in your portfolio, and like just in general beware of whipsaws. Okay, so factor performance we already discussed, and one thing to put in context is that momentum has performed really great over the last few years. Okay, we haven't seen any major corrections. Momentum hasn't seen any huge down performance. Maybe the last one was in 2018 or something, right? So underperformance can start anytime. I'm not saying underperformance will start today, but it can start anytime, right? And this is where we come to what we should do. If there are so many risks, if this is what we should be aware of, then what we should do to better arrange our portfolio so that it can weather these blows. Okay, so the first thing is that if your strategy is right, just stick to it. And a system works only when you stick to it. So when such these like minor swift corrections happen, first of all, do not panic and sell any stock. I just showed you the chart of Power India. It looked dangerous. It looked dangerous to everyone. But you have to believe in your system. You have to stay and stick to it, right? We didn't sell stocks even during the June fall, right? The post election verdict fall. So and those recovered. So you do not know when markets will recover. You want your strategy to give you that confirmation that okay, now momentum is done, this stock is out of the top 50 ranks, or this stock has fallen by this much. Let's say we have this 25% criterion, right? So you have to follow whatever exit rules you have formulated for your own strategy to the T. You do not have to like double guess about it. Ki, okay, no, the stock may have fallen too much, but I have conviction in the stock and all that nonsense, right? So just stick to your strategy. Do not exit the market in any case. You can never get back in. It will be very difficult for you to get back in. So do not exit the market. Downside protection is very important. So when your exit conditions are met, then protect your downside. Protect your downside very, very vehemently, because downside protection is one thing that categorizes one investor from the other. Like those who cannot protect the downside cannot get the upside also, right? So it helps you, it keeps you better in better stead to grab your upside if you protect your downside well. And how do you protect your downside? Whatever exit criteria you have met, just follow that. Okay, so if like for example, if something falls beyond the first 50 ranks, you cannot say that I have conviction in the stock and all that, right? So both ways it applies, right? If something falls and exit criterion is not met, then don't say that okay, this is falling too much and it is a whatever. You can justify yourself with n number of ways, right? This is a government backed stock, budget में कुछ change हो जाएगा, मैं बेच देता हूँ, मैं बेच के निकल जाता हूँ अभी. all that is not fine. Similarly, if something is falling, then मैं नहीं बेचता हूँ, I have conviction on this stock, there are too many good news points coming about this stock. Just ignore all that and stick to your strategy. Okay. Uh, Now coming to asset allocation, and we see on the right hand side this graph, right? So this graph has three things. This chart has three things. It's the source is from personalfinanceplan.in. So मेरा credit कुछ भी नहीं है. But if you see this red line, this is the Nifty TRI chart. If you see the sand line, the bluish green line, that is the gold bees ETF. And if you see the orange line, that is a combination of 50% gold and 50% Nifty, right? So this combination has performed really well, right? If you see in the end, the combination is emerging out to be really amazing. And why does that happen? That is because of the kind of correlation that exists between two asset classes, that is equity and gold. So if we see here after this 2008 fall, Nifty is going down. This bluish line, you can see gold is going up. Here also Nifty is going down, gold is going up. Here also Nifty is going down, gold is going up. 2020 COVID crisis, Nifty went straight up, straight down, gold went straight up. So what happens is that the combination portfolio actually weathers the downsides really well compared to individual equity or individual gold, because gold is also coming down here. Like look at how gold is coming down here and equity is going up. So they're kind of inversely correlated, not perfectly, but they at least they do not have idiosyncratic risk, right? The ones that stocks have with each other, because they're part of the same asset class, right? So when you invest across different asset classes, you can protect your downside reasonably well, I would say. And your asset allocation can be whatever like you decide, right? You can have equity, debt, gold. If you want, you can have like real estate also, although that is not liquid. You can like unregulated assets, crypto and all, we don't talk about on this channel, but there are n number of ways, right? You can have antique paintings and watches also. So whatever your asset allocation is, stick to it. Personally, I feel that like something like a 50-50 equity gold or a 70-30 equity gold has been proven to be more than like reasonably enough in the past few decades. I'm not sure how times are going to turn in the future, but we should, as a general thumb rule, I would say that have gold in your portfolio, have exposure to gold in your portfolio. The amount of geopolitical turbulence in our world is also increasing quite a bit. So we should be prepared for any eventuality anytime. But in all those cases, asset classes like gold is considered a very safe hedge against inflation, against geopolitical risks, against political risks, continuity, anything. Like it's a good enough hedge, and it has given good enough returns in the recent past, and it may not give so much good returns in the going in the future, but at least it will protect your downside well, so that you can play in the momentum side. If you have something as risky as momentum on one side, you should have something stable like gold on the other side to sort of keep your overall momentum in good health. Okay, now within equity itself is risky. On top of that, momentum is high beta, it's even more riskier, right? So within equity, you do not need to allocate 100% of your equity portfolio to momentum factor. You can have investments in like indices, mutual funds. You can, if you have the fundamental lens also, then you can do fundamental investing also, whatever you want. And if you have full conviction in momentum, you be 100% in momentum. There is no issue with that also, right? I'm mostly like 100% in momentum, but it depends on your personal risk appetite, right? The other thing is, when unsure in a broad market fall, so whenever the entire market is falling, not individual stocks, the entire market is kind of down and out, and you are doubtful about deploying additional money into your DIY portfolio. For me personally, I would not have I would not have any issues with deploying additional money. If I get additional money, I will just deploy right into the portfolio on that day, regardless of whether the market is up, down, extra, maybe in very extreme cases, right? But if you are unsure of what to do, you have additional money. If you do not have additional money, then to fir so jao, like go read a book and go take a walk. No need to worry about the market. Actually, one thing I forgot, like when you in what to do only when the market falls like this, right? Sometimes the best thing is to not look at the screen, not look at the market, go take a walk. Don't do anything. If you don't look at it, you won't be like panicking about it. If you look at it every 5 minutes ki aur gir raha hai, aur gir raha hai, aur gir raha hai, aur gir raha hai, right, you would be, your emotions itself will compel you to sell or do something that with a cooler mind you would not be doing in an otherwise stable scenario, right? So anyway, so if you are unsure about deploying money into a DIY portfolio, then deploy this additional money in index funds, in ETFs. There are momentum ETFs also that we have discussed previously on this channel. You can go check those videos out. These are more tax efficient as well, because when we are doing in a DIY momentum portfolio, so we are almost no stock is staying till 1 year, right? So we are selling most of the stocks either at a profit or loss. Loss हो गया तो फिर तो ठीक है, टैक्स नहीं देना है. Profit हो गया तो उस पे 15% HTCG लगेगा, right? When you are investing in momentum ETFs or any other ETFs for that sake, you can stay invested for decades, right? You don't have to sell anything. Just keep accumulating whatever additional capital you're getting, keep accumulating there. Whenever these kind of falls come, actually, it is difficult to bet on individual stocks whether they will recover or not. But the index almost always recovers, right? So you can like understand that the index may remain subdued for some months, maybe a couple of years, right? But it is very hard to believe that the index will not come up and recover, right? So whenever in doubt, just buy the index or any ETF. So yep, so that was it for today, and hope you liked this video, and whatever experience you had in previous corrections or in these minor corrections, you can share in the comments. New subscribers who probably are watching their first video on this channel. So on this channel we have been following this experimental momentum portfolio, which is our core portfolio for quite some time. It is since mid-November 2023, so it has been 8 months in this journey. And if you want to be part of this journey, all the stock names and everything is completely public. It is only for educational purposes. So you can consider subscribing to this channel. And yeah, I hope this video gets uploaded without any hassle, and I hope we do not get too many surprises in the budget. अभी हमने HTCG और इसकी बात की है, capital gains की भी बात की है. So I hope everything just stays as it is, and the market doesn't give any negative surprises, because after like a few red days, we finally made, the portfolio was finally in green. Not the portfolio in general, but the day's return was in green. And let's hope it remains green today also. So I'll see you in the next video. Till then, have a good day. Bye bye.